investor doing things on your own? How about someone working with a firm that isn't so responsive or in sync with your investment philosophy? My podcast talks you through all things financial. Look, there's stuff you don't deal with very often, but investments, insurance, and retirement is something we plan for each and every day. This is the PennyWise Financial Podcast, and welcome to the show. Welcome to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with my co-host Sam Gueli. Today is Wednesday, July 20th, 2022. And today we're going to be talking about, I think, a little bit of excitement, maybe some optimism, some things that happened in the market recently, as recent as yesterday. Sam, why don't you dive into some things that have been happening, some developments in the market?
Yeah, so we're going to see a little bit of positives recently. Starting with the Dow Jones, we're up almost 4% over the past week, and over the past month, we're almost over 4.5% positive. Year to date, we're still down 12%, but that's getting better as the weeks continue here. Same kind of theme with all the major indexes, honestly. Moving on to the S&P, where the past week we're up over 4%. Where the past month we're up about 5.5%. Like I said, year to date, we're still down about 16, 17%. But the 5-day and the month numbers are looking pretty good. The NASDAQ, same thing. Over the past 5 days, up almost 6%. And over the last month, we're up almost 8%. Year to date, still down 24%. But I remember when that number was closer to like 30 and 35. So
That's
again,
right.
Like you said, it's looking at some optimism there. And moving on to the Russell 2000. Over the past week, we're up almost 6%. Past month, we're up over 8%. And again, year to date, we're still down about 20%, but it's getting better.
Wow. I like what I'm hearing. I like what I'm seeing. Yesterday was kind of a nice sigh of relief to see, from all the turmoil that we've seen in the market lately. And I heard somebody say, yes, it's. I think it was CNBC or Fox. It's finally over. The market's, and it's like the day wasn't even over. And how many times do we see the day start off positive, and then end negative, and just the opposite? It happens, and I don't know that we're out of it yet. But I'm happy to see what transpired yesterday, right? People's statements, logging in to their online accounts, has been rough, to say the least, as of the late. But I like that. I do think we're starting to see a little bit of optimism, although I think there are more haters right now in the market about all the things that could be wrong, because there's so many things to really trickle down the effects of positive earnings on these companies and profitability. So with that, let's look at the energy sector. Now, that one was doing quite well early on in the year. Year to date right now, it's showing a positive 26% rate of return. That's the XLE. And it's slipped, right? So in the last month or so, this is down about 5%. And the last week, believe it or not, it's positive 8%. And just about flat on the day. So nothing really exciting there on the XLE Energy Select ETF. Let's move on to financials. So financials year to date, again, not a shining star, down about 17%, even with yesterday's gain. And the last week, it's up 6.5%. And I like what I saw yesterday. So we're looking for some more positive feedback there from financials. And I think that played a big part of what happened yesterday. If we look at the real estate select sector spider fund, that's the XLRE year to date. Real estate is down 18.5%. And the last week, it's up about 4.5%. And yesterday's gain was nice. Today, somewhat flat. So I'm liking what I'm seeing there with financials. I like what I saw with real estate. Energy is just so, but we have seen a huge run up on the market so far year to date in 2022. Now, if we shift gears and look at the digital coins, we look at first the Great Scale Bitcoin Trust. That's the GBTC year to date, down 53%. In the last 5 trading days, up 30%. 5 trading days, up 30%.
That's Bitcoin?
That's Bitcoin.
Oh.
I mean, that's insane. That is insane. And up today, it's up about 5%. So typically what I've seen with these coins is when they're going up, when they're making money, when they're showing positive returns, it's kind of like the risk on, right? That's the optimism in the market. And that may be carrying over from yesterday. If we look at the Grayscale Ethereum Trust, that's the ETHE year to date. Ethereum is down almost 63%. And last week, it's up 57%. 57. I mean, imagine if just about a week ago, you decided now was the time to invest in Ethereum. You're up 57% in a week. Insane. How about Litecoin? Litecoin Trust, that's the LTCN, year to date is down almost 66%. If you were to invest a week ago, you're up about 28%. Not too bad. But Ethereum is really, I think, gets the Gold Star Award there. And Bitcoin being up 30% in a week is not too shabby. Now those coins trade, if you buy the coins direct, they trade 24/7. So you could go to bed Saturday night, wake up Sunday morning, and your account could be worth 20% less, 30% less. And how about gold? Gold has been somewhat mild this year. Right now, it's showing about 5.5% loss for the year. In the last week, it's pretty much flat. And today, it's down just a bit. Now, typically a very good hedge for against inflation. I will say the strong dollar is going to be a challenge. And so, where do people go? Where do people put their money? Is it on the sidelines? Well, I can tell you, we've had a few folks that wanted to add to their accounts, and we've come up with a systematic strategy of doing that. People do it in their 401ks. May not even realize you have a plan, right? And that's the DCA, dollar cost average. Putting money in, buying on the dips. And then there's another way, and that entails reinvesting dividends. What happens there is the stocks kick out a dividend. You have the right to collect that dividend, whether it be monthly, quarterly, semi-annually, or buy back additional shares. You can buy fractional shares, things like that. So I like what I'm seeing. I still think we have problems, and the problems have been there pretty much since January 1. Ukraine, inflation, rising cost of goods, services, supply chain. Anything else? I mean, weather's great outside. Matter of fact, they said that we're due, when I say we, I mean the world, some kind of like heat wave. Did you hear about this?
I mean, I just heard about the one going on in like England.
Yeah, it's no joke. And I don't know if it was the Journal, but they gave a breakdown of how the body reacts to heat. And it doesn't have to do with just like the temperature. So like if it's 75 out, you might say, 75, that's pretty good for the summer. But I think it has to do with humidity and how the body reacts. So the body is going to try to cool down, right? And the way to cool down would be to sweat. If you sweat too much, you could become dehydrated. But there's all kinds of other psychological issues that the body does to help deal with it. Blood flow. So instead of having all of your blood kind of in the central part of your body, in the organs, it releases the blood flow and brings it closer to the surface to cool down your body, which has all kinds of other impacts on motor skills and functionality. I had no idea. But in any event, what I'm alluding to there is the fact that, there are a number of different things that have been going on throughout the course of the year, right? There's always problems, right? And just like in our lives, in your life, in my life, there are day-to-day challenges. We don't give up. We don't sit on the sidelines. We don't decide to say, you know what? I'm not going to go to work today because I could get into a car accident. I could run out of gas. Those are real life challenges, and we face all kinds of challenges. And I think the biggest argument that I would get is this time is different. Ever hear that before? This time is different. You don't understand. We've got a different presidential regime in power. We've got a different economic environment. We're coming off of a 40-year declining interest rate environment. We have rising costs of goods and services. We have supply chain issues. We've never experienced that. And I think that the problems that we have are different, but the effects of those problems and how they play into our lives and how we make money is a different story. So they're not one and the same. With that, let's take a quick break and we'll be right back with the show. Do you want help building and managing an investment portfolio that's right for you? One that will help you maximize growth potential while you're saving, help you generate income when you need it most, and eventually preserve what you've saved to leave to your beneficiaries? We do this day in and day out and take the stress and responsibility of making those decisions off your plate. Subscribe to our newsletter, read our blog post, and listen to our podcast to get a flavor of how we do things. Our firm is unique and capable of handling all your investment and insurance needs. Monarch Wealth Management, our guidance, your future.
Welcome back to the PennyWise Financial Podcast here at Monarch Wealth Management. My name is Sam Gueli alongside of Constantine Kitrinos, and in this part of the show, we're going to talk about college. We're going to talk about secondary education, how to pay for it, things like 529s. Cons, I think you got some good info for us. What you got?
Yeah. When you mention college days, I think of, gaining 15 to 20 pounds with a freshman 15. For me, it was almost freshman 50. But yeah, it's I think college life for everyone is a little bit different depending on your resources and financial aid and things like that. So for some families, you may have that option, right? So you may have financial aid as a substitute or a partial funding of college. And we have families that do that in some cases, depending on their net worth and their income, they're going to be big driving factors in what the student will qualify for. Student assets will play somewhat of a role in that type of funding, but the majority of our clients, I would say, a good 60 to 70% will qualify for a very small amount, if any. So they're looking for ways to save to help their kids in college, right? And when I went to school, I was at UB. Did you go to UB, Sam?
I did go to UB.
You're a UB grad. And I went to school about 20 years ago, roughly. So things are a little bit different as far as cost. I went to a state college. In-state education, obviously going to be a little bit less expensive than if I went to another state. And, families want to know, what should I do? What should I be thinking about? And with that, the first thing that comes to mind is a 529. I'm sure you've heard of a 529 before. Mm. What do you know about a 529? Anything good or bad?
I mean, I only know basically that it's just a savings account that you open for your kids and you can only use it for education.
You got it. I mean, you hit the nail on the head.
Understanding.
And you know what? That, honest to God, I'd say 90% of the clients that come to us have that same understanding. Just what you said. I understand it's an account that I can use to put money into for my kids' college, right? And that's all I know. So some of the benefits are you'll get a little bit of a tax savings at the state level here in New York State if you're participating in the New York State plan. Again, don't get too excited. It's not like a huge, massive tax break. It's a mechanism which allows you and family, friends, relatives, when you have birthdays, things like that, to put money into this plan, right? They have all kinds of fun, different ways. They have vouchers and coupons you can hand out for birthday parties, whatever. But typically it's funded by the parents, right? Parents, mom, dad, and maybe grandparents. You might have some relatives that throw some cash into that account. Now, when do you open those accounts? The sooner, the better, obviously. And how soon? If I just got married and I'm planning a family, can I start opening accounts now? I think I'm going to have 5 kids. I might as well open 5 529s, right? That should be fine. No, you're going to need the child's social security number. So you're going to attach that as a beneficiary, right? So they're going to be the beneficial owner, benefactor of those funds. You save in those accounts, you get a little bit of tax break. Now, how much do they make? If I throw in $100 a month into this account. Is it earning 5%, 2%, a 1/4%, like a savings? Any idea what they're earning?
I really don't have any idea.
It's okay because a lot of people don't. They have no idea. Just like 401ks, they ask me what pays more, 401k, traditional or Roth? And so this is just simply an account. It's a title, it's a structure, it's a vehicle to save for college. There's all kinds of investment choices. That's right, investment. It's not a regular savings account. So it is not just like you belong to a credit union. You hop on over to the credit union, you open a 529, you put in $50 a month, and it pays you a 1/4% a year. It is not like that. It is an investment shell, right? And you can choose a bunch of different investments. You can manage those along the way. And the idea is if you start soon enough, over 10 to, let's call it 18 years of savings, maybe more, you're going to see a pretty nice return. And when I say nice return, I'd say average, we're hoping for something around 7 to 10% a year compounded, which can be a pretty sizable amount, right? And so that's the good part about it, right? Now, are there limitations on how much you could put in? Yes, there are. You can't just throw in whatever you want. You can't put in $500,000 and have this money come out tax-free. Your son or daughter's going to Harvard. No, it's not like that. And this is one mechanism, one option for you. Now, what are some of the drawbacks? What if your kid, your son, your daughter gets a scholarship? What if they get a full ride for scholastics? What if they get a full ride for hockey or football or track and field? Then what? Oh, I could just pull the money out and use it to buy a car, to fund a business, right? Well, you can, but you're going to pay tax and then you're going to pay penalties. If you use it for room and board, tuition, books, things like that, computers, things that they'll need for school, for secondary education, you can pull those funds out completely tax-free without penalty. That's a nice feature. If your son or daughter does get a scholarship, you have the right to modify the beneficiary. You could change the beneficiary, right? So there is some logistics on how you can do that and who it can get appointed to. You can't just like pick some stranger on the street and say, you know what, it's going to go to Sammy for college, but he's got a full ride, so I'm just going to gift it to the stranger. Can't do that. So that's where some parents are reluctant. If I put too much money into this account, if I throw away, $10,000 into this over the course of 18 years, and now it's worth $50,000, and I pull that money out and I pay taxes and penalties, well, it defeats the purpose. I wanted this money for college, but we didn't need it. So what else could they do? You could also open something called a custodial account for a child. Have you heard that term before?
Yeah, I think Jay and I have opened a few of them recently.
I'm sure you have. So for a minor in New York State, anyone under the age of 21, right, a parent, an adult, a guardian could open accounts for them. And the difference there is that it is taxable, but it can be used for whatever you want. A car, room and board, books, tuition. You're going to pay taxes on that money, but you will not pay a penalty. Okay, you can add money, take money out whenever you want. So to combine those two types of accounts for minors makes a ton of sense. Hey, look, I don't know if my kid's going to school. I don't know what they're going to do. I want to save for them, and I think it's going to be for college, but I don't know. So maybe I split up the accounts and do half and half, or 60% of the money goes into the 529 and the other 40 goes into this custodial account. Those are a couple options. There's another option. One of them could be overfunding a life insurance policy that builds cash value, right? It's another option. What about business owners? Sam owns a business. We always say, what do you own, a bakery or a landscape company? I don't know what it is today, but let's say Sam's bake shop, right? You got a couple kids. If they're doing something for you that you can pay them an honest wage for, maybe you're taking some pictures of them eating donuts or cakes or whatever it is, and now they're models for your company, right? And you decide to pay them a fair wage, $5,000 each, you could take those monies and put them into an account for them. Could be a Roth IRA. They have earned income. In order to open an IRA, you have to have earned income. They earn that money. And guess what? As a child, there's a certain amount of money you can earn each year and not pay taxes as a minor. So now the business has taken the deduction for the cost, the expense. They've paid for their services to the child, your kids. It's going into a Roth IRA, right? And let's say that Roth IRA is open for at least 5 years. You can pull that money out, the contributions, tax-free, and use it for whatever you want. It's your own money. Now, I'm not saying that's the best option. That is an option that some might use. Some parents may do Roth contributions into their own account. Say you don't own a business. That way you have access to the money. Again, after the account's open 5 years, pull it out tax-free for whatever you want. Maybe it's school, maybe it's a car, maybe it's room and board, books. No tax incentives there. And you're going to be using up money that you're going to be robbing your own retirement down the road. What else is there? How about I-bonds? We had this segment about I-bonds, and I'm going to look this up because there is a function of the I-bonds that you can use as an exclusion for education. And they have a number of parameters. You have to qualify for that. So it says you have to pay for qualified higher education expenses in the same tax year for yourself, your spouse, or your dependents. So that's an option there. Pulling it out and maybe even bypassing taxes. The education tax exclusion permits qualified taxpayers to exclude from their gross income all or part of the interest paid when you redeem those bonds. So again, you can't buy those bonds from us directly, but the Treasury Direct website will give you some more information. Definitely want to talk with your accountant. So we mentioned a few different ways to help pay for college. What was, do you remember what tuition was at UB when you were at school?
I think the in-state tuition was somewhere around 5,000 or 6,000 if we're just talking about tuition.
Just tuition, not room and board,
not room and board,
not dorm, not the food plan.
Yeah,
the meal plan.
I only lived on campus my freshman year at UB.
Okay,
so that was like a pretty good way that we saved a little bit of money because room and board isn't cheap, obviously.
No, it's not.
We found an off-campus apartment that saved us a lot of money just paying rent weekly, or monthly. But yeah, I think it was around 5 or 6 when I was there, just tuition.
So when I went, I don't know that it was very different from that. I think all-in cost was around $13,000 for the year, with room and board, the meal plan. Like I said, I was a big boy. I think I packed on the freshman 50. But this, we're using a calculator. This is called calculator.net, and they look at the average cost of college tuition right now. Total cost right now on average is about $191,000 for a 4-year in-state college degree that will happen in 10 years. That factors in a 5% rise for the next decade.
Yeah, see, that's crazy to me.
Isn't that insane?
I don't think we paid anywhere near that.
No. I can tell you that I did not have a 529. I didn't have savings set aside. I took out loans. I had some scholarships, some grants, and I worked, and that's how I paid for it. But if you're a parent that wants to, let's say, take the burden of maybe 35% of college costs, what's it going to take to save? Well, you need to save in total right now. And again, this is looking out 10 years. Say your kid is 8 years old. And you're kind of playing a little bit of catch up, right? You're going to need to save about $67,000 if you want to pay for 35% of their college costs. That's looking out 10 years from now. Your target savings amount in today's dollars is about $43,000. Okay, that's equivalent to saving $336 a month for the next 14 years, right? The amount needed in freshman year is about $15,581. Okay, so that's 35% of the college costs, saving in today's dollars about $340 a month for the next 14 years. So that's no joke. College is a huge expense. Some parents want the burden. Some say, no, let the kids worry about it. I'm going to fund my retirement and help them when I can. I've heard a ton of financial shows over the years, educating and guiding clients and giving advice on things. not to do, and one of them being do not co-sign for loans for your kids. Do not take on that burden, because guess what? Even if your child makes some financial mistakes, never finishes school, that debt doesn't go away. Never goes away. Even if they go bankrupt, you cannot just write off student debt. I know there was some legislation proposed by this current administration. I don't know that it will pass ever, and get completely wiped out, but those are some things to think about. There's not just one answer. Everybody's a little bit different. It's worth a conversation. Again, give us a call, 800-480-1580. Love to chat with you. I think it's time for a break. We'll be right back with the show. Do you have a high deductible insurance plan? If so, have you set up your HSA? There's a ton of people who don't know what it is or how it works. Even worse, there aren't many people who can give you advice about how to make the most of these powerful and unique programs. Not many advisors focus on this in their practice, don't understand the mechanics of how they work, or even where to begin helping their clients. Reach out to me, Constantine at Monarch Wealth Management, and I'll guide you through this process and get you on track to make the most of your high deductible plan and your superhuman HSA. Welcome back to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with my co-host Sam Gueli, wrapping up the show. All right, last segment, Sam, I know you've got an article you're dying to talk about from the Wall Street Journal. I know you are.
Sure, yeah. We're talking about inflation over here. We've been talking about it a while. Everybody knows it's kind of killing us, especially at the gas tanks and, pumps. But
Wait. Gas pumps. Have you put in gas lately?
Yeah.
Up or down?
Actually, I think it's gone a little bit down over the past
has.
couple of weeks, but it's still just under $5, I think.
$4.99.
Yeah, I mean, I remember when I first started driving, at least, we were only paying like under $3 a gallon. And look where we are now. But anyway, back to inflation in general. We're just talking about some things here that have skyrocketed, some things that have stayed pretty much the same, and actually, surprisingly, some things that have gone down.
Wait a minute, gone down?
Yeah, believe it or not.
I can't wait to hear this.
Actually, it'll shock you too, because there's one, sector that's gone down that is surprising to me. But anyway, we'll get into it here. And obviously, energy, we're talking about gas and stuff like that, up 40%. Regular gasoline is up 60%, which is obviously crazy. And we've all seen that. Some basic necessities like milk and groceries up about 16%. And if you have a dog or a cat, pet food up over 10%. And we have 2 dogs, so we're definitely noticing that too.
You know what? You bring up pets. I can tell you during COVID in the last couple of years, the ability to get a pet, the waiting time increased quite a bit, because I know my wife and we had some family members looking to buy a pet, and it was like 6-month wait. You got to wait for the next, and everybody was buying pets, I think, because you're at home, you're not getting out much, and they needed that social anxiety release.
So I noticed that everybody bought something over COVID. People started calling things, it was a COVID purchase. So for my parents, they actually got 2 dogs. And kind of like you said, they were on a wait list for a while. They had to wait till the next litter was born. Then you have to wait till the dog's 6 weeks old or something, or 2 months old or something like that before you can even get it. And my parents actually drove to Indiana just to get a little puppy.
And did you go?
I did not, no. But yeah, I don't know. If we're going back to inflation costs, I think this one is a big one too. Airline fares up almost 40%.
I find that hard to believe.
I think so.
Yeah, I don't. Obviously, you didn't write the article. At least I don't think you did. When we talked about airline costs back in 2005, I went to Europe, and I spent about $1,000 for a ticket. And Dave and Jay just booked their tickets to Macedonia, and they paid about $1,000, maybe $1,100. So that might be up 10% from 2005. Now, I don't know if this is just looking at year over year, which I believe it is. I think it's looking at last year's numbers versus this year. How much? You say 34%?
Yep, 34.
Wow. I wonder if it's just like specific airlines or just, I don't know. I don't know. Maybe we just found cheap places to go. Well, you know what? I take that back for a minute. Think about what I just said. They purchased tickets to go to Europe. Right now, the euro and the dollar, I think, are trading
They're pretty even, right?
correct.
Hmm.
And back then, it was around $1.25, $1.30. So right there's a 30% difference, and that makes up. Okay, so never mind. I backpedal.
All right, what was I was going to talk about a couple things that have gone down, surprisingly. Let's get to that.
Let's hear them.
Televisions, one, down over 12%. I haven't noticed that. I haven't bought a TV. I think you mentioned you might have recently.
No, so we haven't bought a TV since I bought my home about 10 years ago.
Oh, gotcha.
So like it's not even, what do they have, 8K now? I don't even have 4K.
Yes, I don't even know what that means. Just
I don't
really
either.
good quality, I guess.
Very
but
good.
The one that got me was smartphones, down 20%. And I think we've talked about it before, supply chain issues and the shortage of those chips that everybody needs. I would think that would make prices skyrocket for the brand new phones.
Same here.
They're down 20%.
My last cell phone purchase was about 2 years ago,
Hmm.
and it was the most expensive phone I've ever bought. I don't know if it was just that model or the amount of memory I had, but I've never spent $1,500 on a phone, and I did.
I think they're kind of overpriced anyway.
Big time.
But what do I know?
Big time. So, okay, so TVs, cell phones, and then on the opposite end, you've got oil, gas, and airlines, which kind of makes sense.
New cars are up about 15% as well.
I believe it.
I don't have a number for used cars, but I think everybody has heard that used cars were like through the roof, at least in the past few months.
So my brother-in-law was in a car accident. Of course, the car was paid off, so it was totaled. So he was out shopping for a vehicle, which he did not plan on, did not hope for. And it took a while. He had a rental for a little bit, but ended up buying a new car because it ended up, when you factored everything in, being cheaper than a one-year-old car, which I'm not sure I understand.
It doesn't make any sense. And I think even a couple years ago, like buying a used car was like the best time to buy a used car in a long time because they weren't that expensive, but you could still get 1 or 2 year old cars.
And rates were dirt cheap. I mean, 1%, 2%, 3% for a loan. Wow. Okay, that's kind of unusual. That's interesting. The one thing that I have a hard time with is the cost of cell phones going down, like you said, with all the chips, and you think about cars and gas and whatnot. A lot of the cars that I see coming out tend to be larger cars too. I feel like it's a lot of SUVs and trucks. When I drive by the car lots, that's what they have available. It's not so many cars.
I think everybody wants an SUV these days anyway.
After years of driving a car, and I have a car now, and I had an SUV, I miss the SUV.
Yeah.
I miss the ride. It's mainly for the ride. And I feel like I'm an 18-year-old kid again when I climb down into a car, and I'm getting older. So now going down into a car, you feel every bump in the road, and we've got a lot of them. And it's just not a comfortable ride. Not like an SUV. You feel luxurious. It's in a nice appointed seat. You got great vision on what's going on, what's not going on. So interesting updates from that aspect of things. There's another article in the journal that talks about the unpleasant truths about savings apps. Now, you may know some of these savings apps. I've seen them all the time. I think Truebill has one. They have all kinds of things that can do budgeting for you, looking at you link up basically all of your bank accounts, right? And then they try to offer you cross-sell other products to you. Hey, Sam, you need a bank account. Hey, Sam, you need a loan. Hey, Sam, you're paying 5% on this loan. I can get you 3%. So they cross-sell products. Nothing wrong with that, I guess, right? You sign up for something that could save you money. They offer you a way to save, and they used your own information to come to that, recommendation. So it's not horrible. But then the article goes into talking about how these apps, a lot of them, will offer you a pretty enticing rate. Hey, Sam, you can get a 3% savings account. Well, a lot of them aren't deemed as banks. They're not like a real charter, right? So they don't have FDIC coverage and things like that. Think about, for one example is Coinbase. So I know you don't invest in crypto, but on Coinbase, they offer, 3%, 4% yield on some of these coins. So you throw in $1,000, you collect 3 or 4% yield, right? The problem is you also lost 50% of your principal because the coin value went down. So, and again, not having the FDIC coverage, it's not a bank account. I guess the problem there that they're trying to point in the journal is the way they're marketing it. Instead of saying like, hey, this is not a traditional bank account, this is an investment of some sort, and a lot of them charge fees, it's proper disclosure. And I think that's what it comes down to, is knowledge and education, and just understanding. And we do this for our clients. So I have clients that we do some budgeting for, some estate planning, possibly thinking about buying a vacation home, rental property, whatever it might be. So there's different things for people to consider. At the end of the day, I think it's worth doing the homework. It's worth working with an advisor. And our clients that are on our subscription models are paying us to help guide them for those reasons. So we covered a lot of ground. We looked at inflation. We looked at apps. We looked at things going on in the world. We looked at inflation. We looked at cost of goods and services, ways to save money, budgeting, things like that, and then ways to save for your kids' college. All that in a nutshell.
Sounds good to me.
Sounds good to me, too. Thanks again for listening to the PennyWise Financial Podcast. This is Constantine here with my co-host, Sam Gueli. Thanks again, everyone.
You've been listening to PennyWise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is PennyWise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC.